Good afternoon and welcome to the BUSHVELD Minerals Limited Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives in the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Craig Coltman, CEO. Good afternoon to you, sir.
Good afternoon and hello and welcome to the BUSHVELD Minerals H1 2024 Interim Results Call. Thank you for dialing in. I'm joined by Robbie Taylor, our CFO, to run through the numbers for the first half of 2024, which we announced earlier this week. To note, before we get into the details, given the sale of Vanchem, the asset is now classed as a discontinued operation and held for sale, and is therefore presented separately. The sale of Vanchem is expected to be concluded with approval from the competition authorities expected by the end of October 2024. With this in mind, I will run through the performance over H1 2024. We have continued our efforts to streamline operations and drive efficiencies, and we remain committed to asset rationalization, cost-cutting measures, and a reduction in headcount, while simultaneously making significant strides in the turnaround initiative at Vametco. Following these initiatives, we have already seen vastly improved operational stability, as evidenced by the production figures at Vametco, which saw production of 905 mtV for the 6 months and 548 mtV for Q2. Notably, May was a standout month at Vametco, with production reaching 217 mtV, the highest monthly output since my tenure began a year ago. In addition, the lower sales volumes, the vanadium price has come off substantially since the same period last year by about a third, which is important to note, as the adjusted EBITDA for the 6 months shows a loss of $14.3 million and an operating loss of $18.6 million. Post-period end, we continue to work to ensure Vametco is a cash generative, and we are encouraged by our recently month and quarter production numbers. To maintain the stability and success at the plant, we are focused on a number of cost-cutting activities. We are aiming to optimize operations at the asset level and right-size the organization by reducing current labor complement at both Vametco and head office. We're implementing several operational initiatives for yield improvements from the kiln to finished goods. In addition to this, we are changing the structure of our purchase agreements to longer-term contracts, thereby targeting annualized savings in the order of $8 to $10 million by the end of 2025. Further to these practical efficiencies at asset level, we expect to receive Competition Commission approval by the end of October 2024 and complete the sale of Vanchem. In addition, we are looking to complete the sale of other non-core assets, Limo and Balco. I've mentioned our monthly production numbers already, and our priority is to attain and maintain a sustainable production of 240 mtV by the end of 2024. And we are now focused on managing our working capital effectively and on receiving the outstanding balance of funds due in 2024 from Southern Point Resources. By way of a post-period update, as at 31 August, we have a cash balance of $4.1 million, having received $10 million in match funding from Orion, and have also secured the full $12 million of working capital facility from SPR. We are currently in discussions with a joint venture partner for the transfer of liabilities from Balco and the removal of a guarantee provided by Bushveld amounting to $1.5 million. And we've also received approval of the disposal of Limo Holdings, which will result in Bushveld no longer being accountable for a $2.5 million debt contingent on certain outstanding conditions being met. Cash costs for H1 2024 were significantly higher than the same period last year at $32.80 per kilogram, owing to lower production volumes, given production constraints at the start of the year, as well as the higher cost of raw materials. With the stronger production figures resulting from our turnaround strategy, we look to see these cost decreases as operational efficiencies improve, in addition to our expected annualized target savings of between $8 and $10 million by 2025 year end. I'll now hand over to Robbie Taylor.
Thank you, Craig. Good afternoon, everyone. Sales were down over the half year at 949 mtV, owing to low production volumes. The aforementioned depressed vanadium pricing environment resulted in an average realized price of $26.9 per kilogram of V and the H1 revenue of $25.6 million. This has placed further pressure on the ability of our operations to generate meaningful positive cash flow. And the company recorded an adjusted and underlying EBITDA loss from the continuing operations of $14.3 million and an operating loss of $18.6 million. Moving on to costs. Costs per unit sold for the period, including sustaining capital expenditure, were $42.9 per kilogram of V, which is a 40% increase on that of last year, given the lower sales volumes. The cost of sales was lower than the previous period, given the lower variable production costs. Other operating income and costs were down to $5.5 million, owing to lower selling and distribution costs on the volumes, and this reduction was partially offset by a $1.5 million decrease in other operating income, primarily due to a reduction in foreign exchange gains because the rand strengthened compared to the US dollar over that period. The higher operating costs for this half year saw cash outflow from operations of $16.3 million. Cash used in investing activities, including sustaining capital expenditure of $1.9 million, was primarily driven by capital expenditure on property, plant, and equipment. Bushveld raised $17.8 million from financing activities, including $18.9 million received from the SPR Interim Working Capital Facility and $1.4 million from equity proceeds. This was reduced by the repayment of finance costs of $1.9 million and repayment of lease liabilities of $0.3 million. This leaves Bushveld with a closing cash balance of $1 million at the end of this reporting period, ending June the 30th. We closed H1 2024 with a total net debt of $124 million, comprised of the funds received from Orion for the production financing, convertible loan note, and senior term loans, in addition to the SPR Interim Working Capital Facility. This SPR facility will be credited to the payment of Vanchem when Vanchem closes after Competition Commission approval is received. To close, I'd like to remind our investors of our crucial near-term priorities, which form our outlook for the rest of this year. Perhaps most essentially, we are focused on receiving the outstanding funds from SPR, which will enable us to progress our turnaround project at Vametco to maximize efficiency and ensure operational stability as we target 240 mtV per month by the end of the year. As mentioned, we anticipate the Competition Commission approval by the end of October, which will allow us to complete the final documentation on the sale of Vanchem, and we are also working towards finalizing the sale of Lemur and Belco. We'll now stop to take questions. Thank you.
Thank you very much for the presentation. Ladies and gentlemen, please do continue to submit your questions. You can do that just by using the Q&A tab, which is situated on the top right-hand corner of your screen. We did receive a number of pre-submitted questions, and I want to start the Q&A session off with these. The first one reads as follows. Hi Craig, I read the interim results and saw no mention of Selcube or Enerox. What is the situation in regard to Bushveld's stake in these entities?
Yeah, good observation. With the help of our brokers, we embarked on a strategic process for a remaining stake in Selcube. We were unable to find any interested buyers, and Bushveld is now diluted to less than 5% as we have not invested further.
That's great. Thank you very much. The next question. Could Craig clarify that Bushveld will receive $20 million over the next 4 years from SPR as final payment for their purchase of Vanchem?
Following satisfaction of the conditions and the closing date, SPR shall pay 25% of the distributable free cash flow from Vanchem over 3 years following the closure date. So it's a minimum of $15 million to a maximum of $20 million over a 3-year period. Thank you.
Turn to the next question. With the current cost of production far exceeding the present market price, how long do you anticipate continuing operations?
Yeah, look, based on a set of price assumptions, which we can get to later if you like, the operations are expected to continue as planned for at least 12 months from the balance sheet date in this week's announcement. In making this comprehensive assessment, we took various things into account: the outstanding cash flow commitments due from SPR for the balance of 2024, capex and working capital commitments, company debt, expected proceeds from the sale of Vanchem, Mokopane, amongst many other factors. In addition to this, the directors have identified and proactively monitoring options within their control, which will improve the group's liquidity. Thank you.
That's great, Craig. The next question. The expected prices suggested in the presentation are significantly higher than current achievable prices. Are they realistic? And if prices do not show this increase, what are the options available?
Yeah, I'm really glad someone has picked up on this. I mean, I deliberately included, reference to the required price in the latest update, so everybody is informed. We have estimated average sales prices of around $29 a kilogram for the remainder of 2024, which is, only 8% increase from the current prices. We think it's reasonable, based on the impact of the Russian sanctions and the pending rebar standards, which is coming into account. Furthermore, our January to December outlook is in the order of $34 a kilogram. Yes, it's 27% greater than current prices, but this is based on leading industry analysts' market research, and we believe it's not an unreasonable estimate, given we are currently experiencing historically depressed vanadium prices. Thank you.
Thank you. The next question is around Vametco and asks why production volumes at Vametco have been lower than previously achieved volumes.
Yeah, good observation. It's been lower, particularly in Q1, more so. We had a lengthy pre-planned shutdown in February. Many parts of the value chain, asset maintenance, but in particular the refactory of the kiln. That's an annual requirement. That was planned towards the end of 2023, and when we got to the date of execution, or prior to that, the preferred OEM supplier wouldn't come and do work for us. We were not in good standing from a creditor's perspective, and the funds that were expected to flow hadn't flown at that time. So we had no option but to go to a non-OEM, non-preferred supplier to do the refractory work and the kiln. That lasted 6 weeks. And the heater bricks came off again, and we had to take the plant down again. Yes, they came and they fixed it up free of charge, but you lose at least a week just taking down a plant and bringing it up again, in addition to the period you do the work. So we lost a lot of downtime because of having to go to non-preferred OEM service providers in Q1. However, we've seen a stand-up month in May where we received 217 MTV. Thank you.
Thank you very much, Craig. The next question. In the sale of Lemur, it was stated that Bushveld would receive approximately 2 million annual payments over 5 years. Is this correct?
No, that's not correct. The Lemur contract doesn't make any reference to receiving 2 million over the 5-year period. What it does do, it makes reference to the cancellation of our existing 2.5 million guarantee, and that's it. Thank you.
Thank you very much. And then we've got one final pre-submitted question before I hand over to you for the live ones. Given the high levels of debt and the fact that the company is currently producing vanadium product at a loss, how can you reassure investors that there is an actual viable business going forwards?
Sure. I mean, the short is I can't guarantee a viable business going forward, especially at these prices. What I can assure investors is that we are actively managing the liquidity risks, ensuring the company has sufficient funds for the next 12 months, albeit based on those assumptions I've shared with you. With estimated average vanadium prices expected to increase, we have measures in place to ensure funding requirements are met, making the business sustainable going forward. We're pursuing the sale of non-core assets, including Vanchem, Mokopane, implementing a number of cost-saving measures, which should deliver annualized savings in the order of $8 to $10 million annualized by the end of 2025. It's a journey we're on. While we're not quite there yet, we continue to make appropriate strides in becoming the simpler, faster, more effective and stable company, primed to benefit vanadium, from the vanadium price increase in future. I mean, it does feel a bit like we're treading water, for longer than we should. At $35 a kilogram, we'll be swimming, rather than treading water, but we'll be swimming upstream, albeit at $35 a kilogram, given the legacy capital issues we've got to sort out. At $40 a kilogram, we'll be swimming with a strong current behind us, but we're doing everything we can to continue to tread water until the tide changes. Thank you.
Thank you very much for that, Craig. Obviously, we have received some live questions throughout today's presentation. So at this point, if I could hand over to you to read those out, that'd be great. And then I'll pick up from you at the end.
Certainly. Thank you. The first question, if V prices remain static into 2025, how long do you forecast before we run out of cash? I think I'm going to give Robbie the honors of doing it, but the answer is, sometime in Q5, we've got a real challenge if we don't do something differently. Robbie, you want to add anything to that?
Yeah, thank you, Craig. Yeah, in 2025, we've done our going concern assessment, and it was published in the results recently. We had a set of assumptions that we also put into that going concern assumption. And on that basis, we are good for the next 12 months, which takes us to September 2025. The details of all those going concern assumptions included things like price closing, the Mokopane sale, production values, and things like that. They are published in our latest set of results. So the answer, September 25 is what we have for that. Yeah.
But I think to answer your question directly, the question is, if the prices stay exactly where we are, there's no change to the current price, when do we run out of cash?
Oh, that's earlier than that then, Craig. Yeah, because we've got a forecast, as we've said, based on the Project Blue numbers at $34.40, as we've said. And so if you keep the prices at 28, at our volumes, one could work out quite quickly what the drop in revenue would be. A price difference of $6 on 240 tons a month, it subtracts quite a lot of cash quite quickly. So I wouldn't want to say which month exactly, and because there are levers that we pull, as we've also said, we'd reduce capex, or we'd stretch creditors, we'd do various controllable mechanisms that we have under our control to try and stretch it out. But it would be a lot quicker than September 25 if the prices didn't go up.
Thank you. We'll be very challenged, extremely challenged by the end of Q1 next year if the prices stay flat. Going on to the next question, what total cost of production and administrative costs do you expect to come down to after all the cost-cutting initiatives have been achieved per kilogram of vanadium? Yeah, I mean, the answer is $8 to $10 million. There are 4 initiatives underway, macro initiatives. One is the Vametco reduction in labor cost. That's $1.5 million. There is a significant reduction at the CHQ corporate center. That's $1.25 million at least, halving the headcount from where we are now. We're moving from 62 in June last year. We're down to about 30 the end of Q4 2023, and we'll be down to a dozen by the end of this year. That's $1.25 million. That's in labor. With the other driver is ensuring we put long-term contracts in place with suppliers, That's a journey where we spend very little of our creditor spend via contracts, very inefficient, and there's reasons for that. We believe we can get our current low base up to around about 60% of our spend on contract by middle of next year and up to 90% by 2025, based on those set of assumptions we mentioned earlier. That will derive between $2 and $4 million of reduced cost by putting long-term contracts in place between June and December next year. The other initiative is around yield improvements. When we address certain issues at the SRP and the silica and the mill, that will give us an improved yield. We believe a 3% improvement in yield is very reasonable. That's $1.5 million at a price of $30 a kilogram. Obviously, the benefit becomes exponential north of $30 a kilogram. And then we also believe very conservatively we can reduce raw material consumption by 5%. And 5% of current raw material consumption is $1.75 million. But there are conditions to that. Every one of those needs certain interventions. I'm not going to go through every one of them unless somebody wants me to go specifically. But if I take raw material reduction consumption as an example, the SRP is in a very, very poor state. It's running very inefficiently. It's got a couple of purposes, and one of them is to produce AMSIL, which is a critical ingredient we put into the precipitation process, and also to produce sulfur, which you put into the front of the kiln. It's producing nowhere near it should. On those two materials, we're purchasing about 80% of our needs from outside the organization by external suppliers, paying a premium for that. Very inefficient. But I'm not going to get my SRP fixed up until I do basic maintenance like heat exchangers. Those heat exchangers are just short of $1 million for the two of them. There's a 6-month lead time. So, all these things need to happen. Another aspect of reducing raw material consumption is the reagent mix in the kiln. Currently, our silica contents are too high. We've got to get them down to 2.4. They're running above 3 now. And when you have high silica, you've got to use significantly more ratio of sodium carbonate. The problem with that is sodium carbonate is very expensive. And how do we get the silica content down? It's not difficult. In your mill, you've got to get the right quantity and quality of steel balls to make sure that you get the liberation is appropriate, so your silica's down. We haven't got sufficient funds yet to have the right quantity and quality of steel balls in the mill. So when the funds come in, we'll be addressing those sort of issues, and all those initiatives will come to $8 to $10 million, and that's about $4 a kilogram per unit. You'll see one cost go down immediately by $4 a kilogram. Hope that makes sense. Just having a look here. Another question. Assuming Vametco hits 240 by MTB by the end of this year, what do you envisage the all-inclusive cost will be in 2025? That's a brilliant question. Let me start with the break-even EBITDA. So at that volume, 240, you're doing about 2,650, 2.7 per annum because you need a month shutdown. And that's when you're doing proper planned maintenance. You should only be shutting the plant down once a year for a month. We've done it 3 times this year for reasons I've already explained. Plants don't like to be shut down and started up again. So you do once a year, you do 240 per month, and gives you just sort of around about 2.7 for the year. Your EBITDA break even is $30 to $31 a kilogram at Vametco. Okay, but that's not going to save the day. Then you've got your capex. Your capex should be, in a normalized environment, $5 million. So you add another $2 per kilogram onto your cost. But because we got the legacy issue of the buttressing of the Slimes Dam, and we've got Barren Dam legacy issues, other environmental issues about water purification plants we need to do, we're spending in the order of $10 million in 2025. So that adds together, that's another $4 a kilogram. So all of a sudden you go from an EBITDA of 31 to $35 with your capex. That's before the initiatives I've spoken about right now. The $8 to $10 million is not going to happen throughout the year. It's a phased approach. You're probably going to get half of that, or for on an annualized basis, given the long lead items for SPR and things like that. So you're going to get down to about $32 to $33 all-inclusive costs for 2025, based on the increased capital that we require for 2025. I know you didn't ask this question, but of course that doesn't leave much to pay the debt, to service the principal debt and the interest. You got to be getting closer to $40 a kilogram to make sure you can do EBITDA break even, you can do all-inclusive cost break even, including your capital, and service the debt over the period of time. Now, look, if you don't get a $40 a kilogram and you get a 37 or whatever it may be, there's always negotiation in room for everything in life. But if you wanted to meet every single contractual agreement, address every single capital legacy issue, closer to $40 a kilogram will see you servicing everything, including all the significant debt we have on this balance sheet. That was more than you asked for, but I hope that makes sense. The next question is, what steps is Bushveld taking to regain market share, particularly in regions like the US and Europe, where vanadium demand has historically been strong? Yeah, brilliant question. Look, there are contracts in place that you need to deliver on the minimum quantities, okay? And Wogan are our agent, and they do an amazing job. They really do. We're currently doing about 62-63% of our nitrovanadium product from Vametco in the US, and the balance is elsewhere, predominantly in Europe. Last year, this time, we were doing 67-68% of our product in the US, and the reason we were doing that was because we were getting a 10 to 15% premium. Currently, we're getting a very, very small premium, 1 or 2%. So, Wogan, they sell everything we can produce, and where we can get a bigger margin, historically in the US, we would try and take advantage of that and spend a bit more. But you do have contracts in place where you've got to provide some minimum quantities. When there's less of a margin, there's less of a need to actually sell maximum into the US. Wogan, I said to you, they're doing a great job. They get a margin for doing this work, make no mistake, So they have a vested interest to maximize the contribution in the areas between the US and Europe. Historically, US has been the best region, even today, albeit in slightly smaller margins than historically. Thank you. Are there any new potential opportunities for vanadium in military applications? Well, whenever there's steel, there's an opportunity. So, yeah, if there's an increase in demand in steel in whatever sector it is, then obviously that requires more vanadium, and we'll produce as much as we can, and will be sold into the market. This has never been an industry since I can recall. I've been here a short while, very short while, but if you look back in recent history, where you've had a problem to sell your product, even if we were to go on an expansion project and get up to 3.5, selling the product's not an issue. There's enough demand out there. That's the end of the questions. I'm just going to pause for a few more minutes, just see if any further questions come in. There's no more questions coming in, so I'm going to hand back to the facilitator.
Yeah, Craig, thank you very much for answering all those questions you can from investors. Of course, the company can review all the questions submitted today, and we'll publish those responses out on the Investor Meet Company platform. Just before redirecting investors, provide you with their feedback, which is particularly important to the company. Craig, could I just ask you for a few closing comments?
Yeah. Firstly, thank you for joining us this afternoon. Bushveld has really experienced a challenging start to the financial year, given the severe funding constraints, leading to our inability to run the assets effectively, particularly in Q1. And these challenges are reflected in the financial results at this stage. However, we are looking forward to progressing our asset rationalization process, the turnaround initiatives that I've shared with you, particularly at Vametco, to position this company into a simple, fast, and effective business for the future. I thank you.
Thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Bushveld Minerals Limited, we'd like to thank you for attending today's presentation, and good afternoon to you all.